Yeah, you want to think about capital preservation, but really what's important here is for investors to find some investments that are China-proof and Fed-proof and recession-proof, and you're going to have to go back to some names that have real growth in them. So there's names out there, and we're going to give you some stocking stuffers today, like Salesforce, Amazon, Workday. There's some names out there that are down pretty significantly, that still have 30% plus growth, and the trends are still pretty good. So you're getting real bargains out there right now.
You could have said that a month ago or 2 months ago as well, and you got even bigger bargains today. Sandy, at what point do you start taking a look at the technicals and say, you know, the markets are going in a direction, and I'm going to find these stocks that I think are great values, but I'm going to have to be prepared for paying ahead, even if I want to get in right now? At what point do you say, you know what, maybe it's not worth it right now?
No, I think it's always good to have that shopping list, if you will, of very high quality companies and look to buy. I mean, you look at a lot of those fear gauges that Bob was talking about earlier. The VIX is spiking over 28.5. The last time we saw it do that was early February, and that's right when the market bottomed. You look at investor sentiment is really terrible, which is also bullish, and the put to call ratios are bullish. So I think this is, you know, when fear's kind of running in the street is when we like to take our time, buy the right companies, and put them away in our portfolio for the long run.
Sandy, if the market rebounds here, does that mean that we'll revisit their sort of the way they feel about Powell, and all of a sudden it'll be Powell stands up to the market and Powell's got a backbone, and even the president, you know, comes around to that after kind of flogging him the last few weeks?
Yeah, no, it's tough. I mean, basically the Fed has definitely stopped spiking the punch bowl, if you will, and so they've definitely, you know, the street definitely wanted more of a dovish commentary out of him, and it looks like they're not gonna, you know, they're gonna have the, you know, like they said, gradual rate increases for next year, and they're going to continue to shrink the balance sheet. So you got to keep all that in mind. But I think that's getting baked into the market here, and if a lot of index funds are moving the markets up and down, and a lot of short-term, you know, quantitative, you call it some computer algorithms moving the market around. Make your shopping list and buy great companies at these prices.